The Alpine token, linked to the Alpine F1 team, has just experienced one of the most dramatic movements ever seen in the recent cryptocurrency market. In a matter of hours, Alpine's price surged from approximately $1.54 to an astonishing $17.90. A valuation increase of over plus 1,000% only, to subsequently crash back down, closing nearly at its starting level. This lightning-fast rally, followed by an equally rapid collapse, has become a case study in extreme volatility, mass speculation, and potential signs of market manipulation. The hype. A surge fueled by FOMO and low liquidity. The meteoric rise of Alpine began with abnormally high trading volume, driven by a combination of technical and emotional factors. Low liquidity in the trading pair, combined with aggressive concentrated buy orders on decentralized exchanges like Uniswap, allowed the price to be rapidly pushed upward. Within a short time, the move attracted thousands of retail investors, many driven by the famous FOMO, fear of missing out, the fear of being left out of the next big moment in cryptocurrencies. Social media platforms like X, formerly Twitter, and Telegram communities were flooded with posts celebrating the surge, while smaller influencers promoted the token as a bomb about to explode. The collective sentiment turned into a snowball effect, further fueling purchases. In this scenario, even small investors began viewing Alpine not just as a fan token tied to the world of Formula One, but as a chance for rapid, substantial profit. The collapse, when the bubble bursts. After reaching its historic peak at $17.90, the upward momentum abruptly stalled. The trend reversed at the same speed it had emerged, and the price entered freefall. In less than 24 hours, Alpine lost more than 90% of its value, turning to the $1.50 to $1.60 range, effectively erasing all gains from the previous day. This kind of extreme reversal is typical in markets with low order book depth and high dependence on large players. When liquidity is limited, a few large sell orders can drastically drive down the price, especially if there's a wave of fear-driven selling after the peak. Furthermore, leveraged traders saw their positions liquidated during the correction, amplifying selling pressure even more. The role of whales: manipulation or strategic profit? Alpine's behavior raises strong suspicions of manipulation by whales. On-chain data reveals that a small number of wallets made massive purchases just before the surge, accumulating large quantities of the token at low prices. According to analysis from the platform Lookin Chain, these same wallets sold off a significant portion of their holdings near the top, making millions of dollars in profits within hours. This pattern, known as pump and dump, is common among tokens with low market capitalization and weak governance. Organized institutional investors or groups inject capital to artificially inflate the price, attract retail participation, then sell their positions at huge profits, leaving latecomers holding devalued assets. Although Alpine F1 and Binance, which launched the token via Launchpad, have not officially commented on the incident, experts warn that such events could damage the credibility of fan tokens as an asset class. Tokens linked to sports brands need to prove they offer real utility beyond speculation, says Lark Davis, cryptocurrency analyst. Otherwise, they'll be seen merely as playgrounds for whales. Consequences and lessons for the market. The Alpine case serves as a warning to thousands of retail investors who jump into trends without understanding the underlying fundamentals or risks involved. Despite the token having a legitimate purpose connecting fans to the team through voting, rewards, and exclusive experiences, economic structure remains vulnerable to market manipulation. Moreover, this incident occurs at a delicate time for the Layer 2 blockchain ecosystem, where networks like Linear and Polygon are facing technical instabilities that undermine trust. Amid so much uncertainty, highly speculative assets like Alpine may appear to be easy opportunities, but they can also be potential traps. What to expect now? With the price back at pre-rally levels, the focus now shifts to restoring confidence. If the Alpine team can strengthen the token's utility through new events, DeFi integrations, or geographic expansion, Alpine could resume a sustainable trajectory. Otherwise, it may continue to be viewed as a volatile asset, subject to coordinated schemes and fleeting hype cycles. In summary, the plus 1,000% rally and subsequent collapse of Alpine was not just a price movement, it was a reflection of the current state of the cryptocurrency market, full of opportunities, but also full of traps. For those who wish to survive and thrive, the lesson is clear. Education, caution, and critical analysis are more important than ever.